Hi, I'm Jonathan Wild, and we are going to cover how to account for the depletion of natural resources. Natural resources include assets like oil and gas fields, mineral deposits, and forests. Depletion is taking the cost of a natural resource and allocating it to the period when the resource is consumed, kind of like units of production depreciation. In accounting for these natural resources, they are reported as non-current assets on the balance sheet until they are converted into raw materials inventory. All right, let's do an example. Assume a company purchases an iron deposit for $900,000. It has an estimated 300,000 tons of iron ore and a $0 estimated salvage value. To compute depletion, we first take the asset's cost, subtract salvage value, and divide that by total units of capacity to get depletion per unit. In our example, the iron deposit cost is $900,000. We subtract the $0 salvage value and divide by 300,000 tons of iron ore. This gets us $3 of depletion per ton. Depletion per unit is then multiplied by units extracted and sold in the period to get depletion expense per period. In our example, the company mined and sold 100,000 tons of iron ore in the first year. If we multiply that amount by the $3 of depletion per ton, we get 300,000 of depletion for the first year. To record depletion expense for the first year, we debit depletion expense for 300,000 and credit accumulated depletion for 300,000. The 300,000 depletion expense is reported on the income statement. The 300,000 of accumulated depletion is a contra asset account to the iron deposit account, meaning it reduces the reported amount for the iron deposit. This is reported on the balance sheet at the end of the first year as iron deposit of 900,000 less 300,000 of accumulated depletion to get a book value for iron deposit of 600,000. Alternatively, we can report iron deposit net of 300,000 accumulated depletion as 600,000 on the balance sheet. Changing our example slightly, what happens if of the 100,000 tons mined the first year, we only sell 80,000 tons? In this case, we would debit depletion expense for 240,000, which is computed as the 80,000 tons sold multiplied by the $3 of depletion per unit. We also debit iron ore inventory for 60,000. Which is computed as the 20,000 tons mined, but not sold, multiplied by $3 of depletion per unit. Similar to the previous entry, we credit accumulated depletion for 300,000 for total ore mined.